Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts and independent investment advisor Sharmila Joshi and Kalra of Target Investing join me on the show. Good morning to both. Thank you so much for joining me. In fact, it's good afternoon. Today on Hot Money, we'll discuss stocks like the PSU Banking pack. Most of them have rallied. We'll ask a guest whether it's the right time to start investing PSU Banks. Will the rally continue? Tech Mahindra came out with numbers. The revenue was a miss, but nevertheless, on the operating front, it was a decent set of numbers. Symphony, again, quarter after quarter, it's coming out with very poor set of numbers. What should one do on Symphony? And finally, since we are just a week away from Diwali, what is the Diwali pick that our guests are speaking about? But let's start with the first stock, and basically that's the PSU banking space. Let's see what the index is doing and what some of the stocks are doing. Sharmila, the index did manage to rally for the past 2 days. Obviously, a lot of news coming in terms of the SR resolution, in terms of the power resolution, lots of things coming out. Is it the right time now to start investing in PSU banks?
Well, I would say no. Okay. I think a couple of reasons. One is I think the way the entire sector is poised at this point in time. We are seeing whether it's private banks, NBFCs, overall banking, go through a lot of turmoil. And market itself is in a very sort of a volatile phase. So I think, the macro factors don't really play in favor of PSU banks because, at the end of the day, even if you get one good quarter of numbers from them, I think the NPA concerns will still be there because you have to see a resolution on a lot of important issues which are plaguing sectors, whether it's infra, power, etc. I don't think those sectors are, the ones that that they have to lend to are really completely out of the woods. So I think if that happens, to me, PSU banks is a space that I should stay away from. Maybe some of the larger PSUs one could nibble at, but by and large, it's a space that I would really avoid at this point in time.
Which are the stocks that are better off in this space then?
I think probably an SBI or a couple of stocks like that, but maybe a Bank of Baroda. We can see the numbers and decide. But I don't really like anything as such in the sector.
Okay, I'll get back to you, Samir. Have you all invested anything in the PSU banking space? Are you all liking this space?
So we haven't invested, or we don't have a plan to invest. What actually we've advised that whoever has the certain positions in there since past can sell on rallies out here, because what happens, it's more of news led. If you see the quarter results which are coming off, people are giving a benefit of doubt on the asset quality which is stabilizing or reducing. Now over there what has happened, there's no additional NCLT list which came past quarter. The power NPA's recognition has been postponed due to the Supreme Court. So that's why automatically the recognition was less as compared to what was supposed to be coming out. So I think over there the rally is there, the PCA easing might kick in, that might also give another rally. So I think the rallies can be short term, but on a longer term I don't think so there's a value creation over there.
Okay, so that comes to the point now, where should you invest in the financial sector, because NBFCs, most of them have corrected 30-40%, and there is a potential that some of these real estate companies may default, and that's a concern with a lot of housing finance companies. Again, on the private sector banks, there is the big IL&FS exposure. Counters like IndusInd Bank have fallen, Yes Bank has fallen significantly. So should you avoid the entire banking space as such?
So that won't be the right position to take right now. I think for us what we have done is HDFC is there in the system, IndusInd is there, because the exposure, the quantum of exposure and everything is being taken for the negative side, and it might be also there. So the IndusInd correction is there, and we are not suggesting to buy unless it gets cleared by the management. On the additional, we have added Yes Bank at 180, 190 levels, because we feel even if it has a further downside, the downsides are much more restricted in a certain sense. The results are showing there are higher provisions and all, and we are ready to give it another 1 year or 15 months kind of a period to resolve itself and come out of this. So I think these three banks are the place we have placed in.
Yes Bank?
Yes Bank. HDFC is the top position, then comes the IndusInd, and then Yes Bank.
So are you not concerned that IndusInd Bank is not telling what kind of exposure it has to IL&FS? Because the counter is corrected because of that they are not, they are refusing to disclose.
See, the only point is we have the same view that they should disclose how much exposure they have eventually. But I think they're waiting for a resolution plan to kick in by the board, and then they might tell you exactly how much it is. So it might come in another quarter. If it still doesn't come in another next quarter, then I would be much more negative on the management. But still, I think it has good amount of Bharat Financial exposure which will kick in. It has a lot of CV cycle which will help it out. So I think, yeah, the sentiment is negative as of now, and ILFS exposure can be a larger sum than what people expect. But I think I'm ready, as an investor, I'm ready to pass through that benefit.
Okay, Sharmila, since PSUs are something that you don't like, are you having concerns with what's happening in the private sector space also, be it the housing finance companies or be it some of the private sector banks?
Yeah, so I think, very honestly, if you look at the way this entire space has been over the last 3-4 months, we've seen really a lot of concerns starting with the private banks. One name after the other, there were concerns. But now some of them seem to be getting resolved. So I would probably prefer private banks to PSUs. But I think overall what I feel is that this is going to be a sector which is still requires to be given some time for sort of nerves to be allayed and everything to sort of settle down before you really see any serious investment in it. So what I've done is basically whatever, like if you had some recommendations which haven't where you had concern, I've exited. And what like suppose you had an ICICI bank or an SBI or a DCB bank, then I've stayed with those. Okay. But I haven't really added fresh to anything in that space, and I really wouldn't want to at this point in time.
Okay. And Samir, valuation-wise, despite public sector banks being at record lows, then also valuation does not
see the valuations are down for a reason, and they've been down. So this kind of argument has been running for a while now. But as soon as there is some kind of a relief, another sector comes for recognition. So there's a NCLT 3 and 4 list which is due. So when that comes in, that is another point. Second is the power sector reforms. If that NPA recognition also gets approval and they have to take it, so it will be done in more on a volatile sense. So I think next couple of quarters is to be seen. If the asset quality actually improves and it shows the trend, then it might have a case to relook at it.
Okay, so that's the view that's coming in on the PSU banking space. Not enough takers at this point of time. Both of our guests are saying that no to buy PSU banks. So if you indeed want some bit of exposure to the PSU banking space, look at the larger ones like an SBI. But private sector bank probably will be preferred. The next one we want to talk about is Tech Mahindra. Let's see what the counter is doing. It came out with numbers. It's managed to move up almost 6.5%, even though the revenues didn't come in line with what was anticipated. Operationally strong set of numbers. The margins coming in much higher. It's up 6.5% now, almost 7% now. Samir, at these levels, what's your view on Tech Mahindra? Firstly, what did you make of the numbers?
So if you see the numbers, the revenue was flattish, even after the currency impact, and so they were hedged around 72 for the quarter, and the average was 71. So they really didn't get benefit. The problem with Tech Mahindra is around 48% is USD dominated contracts. Others have around 62, 65 or 75 over there. So the benefits came to others more than Tech Mahindra.
Okay.
So, and if you see the numbers, the subcontracting costs went up drastically. So margins could have been higher, but the subcontracting costs are making up for whatever the employee costs are going down. So over there also, I'm a little skeptical. I don't see that kind of contracts coming to them so that they are able to sustain or give a higher revenue growth in coming quarters. So I would switch to a TCS or an Infosys.
Are you surprised with the 7% move on Tech Mahindra on these numbers?
So I think this is given to the currency movement today, because from a 73, 60 to a 74 today, I think plus the some kind of inline meat or a higher margins has given the benefit. So I'm a little surprised to it, but I would reduce my weight or exit the whole thing and switch it to a TCS at this kind of.
Okay, Sharmila, what did you make of the numbers?
Well, I actually like them. I think both the factors have already been mentioned. I think the kind of order wins that they had, those seem very healthy going ahead. The margin improvement is there. And yes, I think, from both perspectives, one is of course Infosys, TCS, definitely I think strong numbers and they look good. And overall, I think, we are coming to a point where some of the mid caps have run up so much that in terms of valuations, they actually look more expensive than some of the large caps. Then I think in an environment like that, if I had to, unless there was some really compelling story in a mid cap sort of a stock, I would like to go play it safe and, go with a stock like a Tech Mahindra or a TCS or an Infosys. So I think from that perspective also, for me, Tech Mahindra is a stock I like. And of course, I think today's move is also because, you're trying to sort of hide behind sort of a defensive play. And I think that's also something that's going to play out. The way the currency is moving, you are going to see a lot more sort of comfort being in a pharma or an IT or, the completely defensive play like an FMCG or something like that going ahead. So I think, yes, for me, I like the numbers and this is a stock that I would recommend.
Overall, in the large cap, the 5 large cap, TCS, Infi, HCL, Wipro and Techem, what's your pecking order?
TCS, Infosys, it's Tech Mahindra, HCL Tech, last Wipro.
Okay, that's the pecking order. So TCS is something that you would prefer.
Yeah, I think it's still...
Even I think you said that you would...
For me, TCS and Infosys, that's where I'll put the weight.
Anything in the mid-cap space?
Mid-cap, we were already cautious in Feb and March when the run-up was actually picking up pace. So over there, I don't think so they've given that kind of a benefit. All the benefit which has come is majorly through the currency movements. So I don't think so I would like to manage my investments through them. So
okay. And are you concerned about the rupee turning, because we saw that happening a while back and most of the IT counters managed to come down. So is that a risk that we are running?
So the risk is the rupee will turn when the RBI reserves are used very drastically. So they have been done from a 405 billion to a 393 billion within 2 weeks. So that has subdued the depreciation movement. So if that takes speed, I think the rupee can reverse drastically because they have a 400 billion kind of a kitty sitting with them. So I think over there, if that gets done, I think then the reverse will happen and they have the risk running over there.
Okay, and Sharmila, before we move to the next stock, anything in the mid-cap IT space that you like?
Yeah, I think a couple of stocks. I like Tata Elxsi, I like Persistent Systems. So yeah, a couple of stocks.
Okay, so that's the view that's coming in on Tech Mahindra. I think the numbers were decent, but Samir is of the other view. Switch out of Tech Mahindra and put your money into TCS. Sharmila is rather bullish on Tech Mahindra even at as a standalone company. The next sector or stock that we want to discuss is Symphony. Now the numbers are quarter on quarter is disappointing. Yesterday the counter managed to come off significantly. Today is trading rather flat in trade. What do you make of the numbers? That's something we'll ask our guests. So Samir, anything on Symphony? What did you make of the numbers?
So if you don't see it even on quarter, given that the season festival got postponed, if you see first half versus first half, the profits have halved. So I think the main lead reason is the demon and the GST base is now out of the bound, which was helping them push the product much more quickly. And I think now there's a certain shift between the markets. As in the cooler market might be showing signs of, degrowing, or there can be a market share shifting somewhere or the other and giving passed on to AC air conditioning markets because of the EMIs and the easy financing which were there. So I think over there, if this trend continues for this quarter also, I don't like Symphony because structurally something has changed in that segment. So I would stay away as of now also.
Okay, what about you? Any view on Symphony?
Yeah, I think absolutely. To just take off from what Samir was saying, I think it's the shift that you're seeing, in the preference where you're actually seeing air coolers as a product not really selling that well. And they have been speaking of getting into increasingly into air conditioners. But, I think you'll have to give them that time for it to sort of start showing in their numbers. And even if you saw Blue Star numbers, they weren't really anything to write home about. This is a very mixed quarter even for Blue Star. So I think in an environment like that, I actually prefer Havels because, I think their Lloyd's piece and the way they've positioned that and the way they've, priced their products and the way, the kind of growth they've seen on that, the consumption space that where the other players have not been able to show. I think that was very encouraging. So I would prefer an Havels over all these other stocks actually at this point in time.
But the trend seems to be that, a lot of companies in the AC segment are now getting into the cooler segment.
Well, they may want to be in it as a as a product that you shouldn't miss out on the market. But if you really see, I think that there is definitely a shift to getting increasingly into air conditioners rather than air coolers. First of all, air coolers don't work in all climate zones. So for instance, in a humid city like Mumbai, we can't use an air cooler. So you have to compulsorily use an air conditioner. So I think the market size is also restricted, and there is a definite shift in preference which can be seen over these last couple of quarters.
Okay, anything else in the consumer durable space that you like?
No, I think everyone.
Do you all have exposure to anything in the consumer durable?
No, we haven't, because the base of the GST demon, which we were expecting that this results will show, and they have already shown. So I think next quarter onwards, they'll even get worse off.
Okay.
Because season piling up of inventory is already over, and through the channel checks, even the dispersals are lessened down. So I think over there, some kind of shift is happening, or some kind of a degrowth is kicking in, which I would like to stay away.
Okay, and the final stock that we want to discuss is we're almost near Diwali. So one stock that we're asking our guest is probably to play for the Diwali and what they should buy, at least for a medium-term perspective. So Sharmila, I'll start with you. Anything that someone should look at as a Diwali pick?
Well, meaning I'm recommending Dabur, but I think that I'm also sort of playing it safe because it is a stock that has actually run up. But I'm expecting numbers to be decent here. They had a fantastic growth in honey as a product last quarter. Even if they, even if you sort of discount demonetization, GST, and see this quarter's numbers, if they still get that double-digit kind of growth there. And overall, I think numbers also sort of pan well for them. And then the kind of portfolio of products that they have, the fact that rural markets are expanding. So I think in fact Patanjali, instead of being a threat, has actually expanded the market for players like this, which have presence in that kind of that space, and that has worked very well in Dabur's favor. So this is a stock that I continue to like.
Okay, is there not a concern that because of the volume growth that has gone up and the base that has gone up, the volume growth won't be seen? You saw how Imami came out with numbers. Yeah. They actually saw a decline as far as their volume is concerned. Today, Dabur will report numbers. So is that not a concern?
Well, I'm hoping that it pans out better than it did for Imami. But as you're saying, the numbers are today, so let's wait and see.
Okay, so that's Dabur. You have any view on Dabur as such?
So again, the same view. The volume growth which they showed for past 4 quarters will create a lot of issues for them to perform on that. Because if you see, the inventory at the distributor level is also filled up to a normalcy. So over there, another push from, and especially when you're not launching new products, it becomes even harder for you to push up. On the oral side, if Colgate is again gaining market share, then they will get sacrificed over here. So I think kind of incremental issues will kick in for consumers, and the valuations are already pretty high. So any kind of small disappointment, even on quarter-on-quarter basis, will take you down.
Okay, and what about your pick? Which is the stock you like?
So I would pick a Petronet LNG. We've been bullish on that. Over there, main reason is in Jan to Feb this year, next year, coming year, the pipeline of Kochi is to be expected to sort out by GAIL, which is already being implemented on the ground, and physical progress is there. That will give a lot of utilization and operational leverage to the company because the expenses are already on the books. Secondly, the Dahej expansion is kicking in March to June. So I think over there another volume expansion will kick in. That is around 18% of current capacity addition. So that will also help the numbers. If you see, the number of trips they've done this quarter is around 56, and last quarter they did around 50. So that's a 12% on the trips increment, and around 18 to 19 crores per trip they get of a operating profit. So we are seeing around a 650, 660 kind of a profit this quarter. And once these capacity hits up and the utilizations goes up, next 1 year should be good for this company.
Okay, what are the risks involved with Petronet?
Risk is, again, the Kochi pipeline doesn't get on the timeline which was suggested by the company. Second is the risk is of the gas pricing. So what happens generally when the gas pricing is kicking in, Mahindra has launched a LNG port, LNG terminal as well. So there'll be a competition on the Dahej and Mahindra side. So they won't be able to pass on maybe that quickly the gas prices hike as they were able to do previously. So that kind of a monopoly issue might come off for the more quarters.
Okay, and valuation wise?
Valuation wise, it's trading around 18 to 19 times forward. On an average P, it trades around 25, 26.
It's trading much cheaper than
so it's been cheaper for a while now because a lot of people think that the gas prices dominate the profitability, but they are on a sufficient margins which help them out.
Okay, that's the view. And before we end, Sharmila, you have a view on Petronet as such?
It's a stock I like, but I think I would agree with the concerns. It's to do with whether the Kochi pipeline issues get resolved and the pricing issue. And also, I like the stock at a much lower price, and from there it's given very decent returns. So I think that would be the main reason why I would rather have a hold on it rather than a buy.
Okay, so that's the view that's coming in on the Diwali picks. Dabur and Petronet are the stocks that have been spoken about. But with that, it's a wrap on today's Hot Money. Sharmila, thank you so much for coming in. Samir, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.